Hello and good morning, everyone. Welcome to the AM video edition of Traders Espresso. It is Wednesday, February 14th, 2018. It's Valentine's Day. Don't forget your sweetheart tonight. And I think the CPI number thought it was giving us a gift this morning in terms of growth, but it's actually not a box of chocolates. It's a box of rocks or something. Because equities did not react well to the news, and we anticipated this. The CPI number came in hotter than expected. The consensus was on a year-over-year basis for 1.9%, 1.7% ex food and energy. The numbers actually came in at 2.1 and 1.9 respectively, so 20 basis points hotter than we thought. Futures sold off on the news. The Dow futures were down by as much as 300 points. They're now off of their lows. The Dow futures are only down 83. The Dow itself is down 62. The NASDAQ composite is actually up 4 points, so about 6 basis points. The S&P is down 15 bips. The RUT is down 4 bips. Treasuries are up. Treasury index, the 10-year Treasury index is up. The dollar has rallied. It was up as much as, I think, what, 40 basis points, 50 basis points. Now it's around 20 basis points. Gold was down, but now it's up over 0.5%, almost 60 basis points. The last time I checked, all of the currency futures, which are dollar denominated, were down, with the exception of the Japanese yen. The Japanese yen has been catching a bid. There's some debate about why that is. Is it a fundamentally driven story? Is it the unwinding of certain trades, or is it acting as a safe haven? And it seems like it's acting as a safe haven because when the CPI number came out, all of the currencies futures went negative with the exception of the Japanese yen. That one stayed just as strong. So it continued to catch a bid even in the face of a stronger dollar. I think that's very telling. Okay? So where does that leave us from the standpoint of our charts? Let's look at the SPX as kind of representative of the total stock market. So in this long-term weekly trend, which we've been looking at, it has touched the bottom. It's traded back up towards this midpoint. Okay, now keep in mind that we also have, I mean, the first two bars form a trend line. So we do have a line that the S&P can trade back up to, and it just so happens it's where that trend line and the upper boundary of the price channel kind of intersect. That would be a good spot for it to trade. We can also draw secondary and tertiary trend lines. So tertiary trend line, which has now been violated. Did I say tertiary? Secondary trend line, which has now been violated. So we'll leave that on there because it could trade down to that point. Could conceivably trade down to this point as well. So I would look for it here and here, as well as here. These are going to be some key areas to keep kind of watching. Depending on what fundamentals tell us. So yeah, technicals are important, but right now I think this is largely fundamentally driven. I don't know that, I'm not going to say technicals don't matter, but there's just so much, with what to focus on, which is inflation, and the CPI number having come out today, that's a fundamental data point. that everyone's going to be looking at. Okay. So to expect, the S&P to stay between, kind of watching what it does in this level, I think will be key. Average true range is kind of coming in. The relative strength is softening. So we did see, selling into oversold, a bounce, selling back into oversold, another bounce. That bounce is now softening. So, the indices are taking their punches. They've shown themselves to be resilient. It's just a matter of whether or not it can keep getting up off the mat. I don't know. What else should we be focused on today? The other thing to keep in mind is that today is options expiration on the VIX. So normally options expire on the third Friday of every month, at least the standard series options. With the exception of options on the VIX index, they expire on Wednesday of that same week. So today, Wednesday, is options expiration. Look for extra volatility, not just in the market, the stock market itself, but also in the VIX, that number. There will be trading around the VIX, people squaring up positions, buying and selling of calls and options. That activity will be accelerated today, so look for that to have kind of a ripple effect. So that's pretty much it for today. Step cautiously, stay wary, be resilient and flexible, because that's kind of what this environment calls for. All right, good luck, everyone.